Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Neil Tolaney, general partner at TCV, one of the largest investors in growth stage companies in the technology space. TCV just announced TCV XI, a $4 billion fund raised on the back of TCV's 25-year history to capture opportunities from accelerated adoption of digital solutions. Just some background for the audience, TCV has invested over $14 billion in leading technology companies, including Netflix, Facebook, Spotify, Airbnb, Peloton, Silver Peak, and Zillow. With the new fund, TCV aims to back future category leaders across a multitude of growth-oriented investment themes. Neil, it's great to see you again. Welcome back to Trade Talks, and congratulations on the new fund. TCV sees additional opportunities in the technology industry. How would you characterize those opportunities and what's driving them?
Well, first of all, I think you said it really well, just a description of TCV, and thanks for the congrats. So just on the $4 billion raise, first I would just say it's a great opportunity for us to celebrate the 25-year history of the firm. This is our 11th fund. It's also our largest one. And we're able to celebrate this with the great entrepreneurs and CEOs that have really allowed for this to happen. In many ways, we've been fortunate to invest in over 350 companies. And we're also very grateful to our limited partners that have allowed us to invest $14 billion over our history. So we're very excited for what's to come. We're obviously, Jill, to your question, we're obviously very biased here. Technology is our passion. We see incredible opportunities on a go-forward basis in many thematic areas that we continue to prosecute day in and day out, which we can certainly get into. I would say one of the biggest lessons for us is on a pre-pandemic basis, digital adoption in many industries, whether consumer facing or enterprise facing, was already rising. And during the pandemic, there's been a significant pull forward of that adoption that we think will be sustained over the longer term. So if we just think of, as people, any ability to get by during the pandemic, whether it's basic communication or just a lot of basic areas in life, technology has a remarkable ability to democratize the access to that information and that content, those resources. So we're not only excited about the growth, we're excited about technology's ability to help people in so many dramatic ways.
What investment themes are out in front for TCV right now?
So on a day-to-day basis, I cover consumer internet for the firm, and there's been two areas in particular broadly that we've been really focused on. One is just the rise of digitally delivered expertise in a variety of areas. So as you mentioned at the beginning, we have been a significant shareholder in Netflix and Spotify on the digital entertainment side. As it relates to fitness and wellness, we're seeing a huge ramp of utilization of those applications. We're a large investor in Peloton, which has enviable content for indoor exercise. We're also a recent large investor in Strava, which is motivating people on an everyday basis to go wake up and work out in any form and do that in a community context. And then, we've been really fortunate to be investors in education technology. And Jill, one thing we talked about last time we got together is, I'm a father of 4 kids, and, the ability for education technology to continue to provide really unique content, whether in a one-on-one engagement model or just through that content itself, has really facilitated the education of children and adults in a lifelong learning context on the come. The second is actually the ramp in physical delivery. And many of us have continued to order online in e-commerce settings. We're seeing a big ramp in particular in the grocery and restaurant side of the equation. That was an area that was significantly underpenetrated before. And we think just given the ramp of adoption, it's allowed those businesses to have an economic model that's now more underwritable. But importantly, they're able to convey to consumers a price and selection that is now enviable even relative to the offline environment. And so that's been pretty inspirational to see, and also is really convenient for consumers on an everyday basis. So between those digital products and physical products, we're seeing a huge amount of opportunity.
What's the strategy overseas, and how can we compare it to the investing TCV has done for the past 25 years?
Great question. So we're very thematically driven as a firm. One thing we've seen increasingly year in and year out is the borders between countries and continents, particularly in technology, is no longer hard. It's gray or non-existent. And I'd say the other aspect as a firm is that we're intensely collaborative, agnostic of where our investment professionals sit on an everyday basis. We've been able to invest $4 billion outside of North America to date. We see that actually with an ability to increase that over time. And one area in particular where that's been the case is financial technology. So we've been lucky to be investors in Klarna, in Mali, in Mambu, in Revolut, in WorldRemit in Europe. We're an large investor in Nubank in Brazil. We recently made an investment in a company called Wealthsimple in Canada. All of these companies span the digital banking, payments, and online investment management ecosystems, and they're all in different countries across the globe, but they all resonate with the centralized theme as a firm in financial technology that we've been developing, that we've held, that we've improved, and had the ability to partner with the category defining companies on a go-forward basis. So that's just one example of many, and we're going to continue to see that on the come, and we're excited to go after that.
Neil, how would you say IPO and M&A markets are evolving?
You know, for us, one of our original theses as a firm was the ability to invest in companies when they're private, and then have the ability to cross over into the public markets. We're seeing today a variety of companies with a lot of options within technology. You know, some of them are pursuing private capital raises as they continue to grow their business. The IPO markets have obviously accelerated and conveyed the opportunity for companies to go public and access capital through that domain, which our portfolio companies have enjoyed. We recently took Airbnb public, and that's obviously been successful. And then beyond that, really IPOs are just financing events from our perspective, and these companies continue to grow, and we want to have the opportunity to invest in category defining companies. On the other side of it, strategics are really hungry to buy these category leaders in technology across consumer and enterprise. And so we're seeing a lot of activity. And we have found as a firm that since our first fund, we have had relevance in all of those contexts and feel well situated that we can continue to invest a good amount of capital, both private and public, on a go-forward basis.
What advice would you offer to CEOs and founders looking for funding right now?
You know, my advice to them, and you know, being an entrepreneur of a high growth business that's, you know, category defining, it takes a lot of hard work to get there. And then, you know, on the flip side of that, it's a real privilege for them to continue to accelerate their position over time. They're going to have an enviable list of partners on the capital side with whom to align. I would advise really three things. One is, even in the ramp of a lot of deal activity today, I would just encourage those entrepreneurs to get to know their future investors and partners really well. As a firm, we typically get to know entrepreneurs with whom we invest over a multi-year period. And that's really created not only for greater relationships, but importantly, really good alignment heading into that partnership. And therefore a board membership that aligns with a lot of the philosophies that we contemplated at the beginning of the investment. The second is there's a lot of deal activity. You know, pay attention to some of the soft things. Does an investor have high integrity based on references? Do they do what they say they're going to do? Are they ethical? I think at times, you know, there's so much deal activity out there. There's a lot of focus on valuation, which entrepreneurs should certainly pay attention to. But I think there's these softer elements that we love to align on with entrepreneurs. You know, we've been an investor in Netflix for 20 years, and Zillow for 15 years, and Spotify for 9 years, and then Peloton through the public offering for multiple years. If you just think about that, these are really lifelong relationships that you have. Valuation's important, but some of these softer things are areas that I'd encourage CEOs to continue to focus on a go-forward basis.
Neil, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for the time. Much appreciated.